Bank Negara Malaysia has issued a warning to individuals or companies conducting illegal money lending activities using fake money lending licenses claimed to be issued by the central bank. Bank Negara says that these fraudsters aim to deceive the public into believing that they are licensed money lenders and to lure them into making loan-related initial payments such as administrative expenses, stamp duty and legal fees. The central bank says it does not issue money lending licenses and that the business is in fact administered by the Ministry of Urban Wellbeing, Housing and Local Government. It advises members of the public to refer to the list of institutions that are licensed or approved under the laws administered by BNM before entering into any business or investment transactions. Express Carrier is expecting to see revenue grow at least in the mid-teens for its fiscal year ending June 30, 2018. However, MD Tiong Teck Lian says margins may continue to face compression. This as the group plans to invest in doubling its handling capacity to about 200,000 parcels a day within the next 2 to 3 years. Tiong explains the group's local and regional growth ambitions have led to additional expenses to grow its management team as well as to invest in more trucks and employees. Still, he says any decline in margin will be compensated by scale. In its first quarter ended September 30, 2017, GD Express saw net profit margin fall from 14% a year earlier to 11.4%. As for its plans for the next 5 to 10 years, Tiong says the company will be in an aggressive growth phase. It plans to set aside between 30 million ringgit and 50 million ringgit per year for capex for the next couple of years in order to increase capacity. Astro Malaysia Holdings' third quarter net profit saw a 3% dip due to lower EBITDA in its TV and radio segments. Earnings stood at 146.7 million ringgit versus 151 million a year earlier. Revenue likewise was flat, declining by 1.92% to 1.4 billion for the quarter. The softer earnings were mainly due to a decrease in subscription, advertising and licensing revenue, although it was offset by higher production revenue. Despite that, Astro declared a third interim dividend of 3 cents per share. Going forward, Group Chief Rohana Roshan says it is committed to growing its businesses by reinforcing its value propositions in the homes and its reach to its advertisers, adding that it is confident that it will continue to build on existing core revenue streams whilst embracing digitalization and cost economics. Astro also announced that it has formed a JV with Group Majalah Karangkraf to extend Astro's online presence among the Malay language audience. Astro will invest 100 million ringgit for a 51% stake in the JV vehicle Karangkraf Digital 360. Sintex's first quarter net profit rose 39% due to better sales from both its manufacturing and property development segments. Earnings were 72.4 million ringgit as compared with last year's 52 million. Revenue went up 23% to some 659 million ringgit from 535 million previously. It declared a final dividend of 10 cents. On its prospects in the manufacturing segment, Sintex says it will continue to remain vigilant to external forces and risks such as resin price fluctuations, raw material supply constraints and forex fluctuations. It says the group will constantly monitor external developments to ensure that the volatility is managed in a prudent and effective manner. As for its property division, Sintex says its focus on affordable housing shall continue to dominate and lead the way to contribute to its sales revenue for the coming financial year. Nextgram has called off its plan to jointly develop the Angkasa Icon City mixed commercial project in Cyberjaya with Seychelles company China Asian Capital Holding. Both parties had agreed to discontinue the joint development agreement signed on May 19 after a few subsequent discussions. The JDA duly lapsed on August 18. In May, Nextgram had appointed China Asian Capital as the joint developer and turnkey contractor for the project. It was to comprise a hotel, a block of small office/virtual office, and a block of service suite apartments.